Hello and welcome into the KE Report. Shad and Corey here as your host, and we're getting an update from Nick Hodge, co-owner of Digest Publishing and editor of Foundational Profits and Hodge Family Office. And Nick, always great to get you on once a month to just see what's on your mind as far as the macro side, and then of course diving down into the commodity space and the resource stocks. From a macro standpoint, there's just a ton going on. I know a lot of us have all been talking about it till we're blue in the face, whether it's tariffs or the Trump policies as far as global trade, what it means for inflation, the health of the economy, what's going on with the dollar and interest rates. So there's a lot of different covalent forces here. What has your attention, Nick, as far as the macro landscape?
Good to be back with you guys. I get to learn what's on my mind as well when we sit here and let the hot air come out of my mouth. We've been talking about a gold bull market for a while. Gold has been doing well, and it was doing well despite, typical things that should have been headwinds, like a very strong dollar, running to 109, 110 on the DXY index and bond yields screaming higher ever since the Fed started to cut last year. Despite, the strong move upward in the dollar and bond yields, we had gold that was going up for a number of reasons, right? Ongoing geopolitical uncertainty, buying from central banks, uncertainty about this new Trump administration, et cetera. And I think a lot of people were waiting for the flip of the calendar and the inauguration to see what some of the policies were going to be. And they continue to be quite erratic, which was par for the course for Trump. Massive tariffs announced over the weekend only to be pulled back a day later, right? And that volatility is also good for gold. When people don't know what to buy, they often reach for gold bars. And we've seen that profusely over the past week, even to the detriment of Bitcoin, which, by the way, has lost some $6, $7, $8,000 from its recent highs. So gold is looking really good. And now you're getting a rolling over of some of those things that traditionally should be headwinds. Like the dollar is now softening, pulling back from 110 to 107, and even bond yields now are starting to roll over. So I think that'll be really good tailwinds for the precious metals complex. And even other precious metals are starting to move now. Silver, which has been the gray-haired stepchild, is starting to catch a bit as well, back over 32. And lo and behold, seeing even pick your term, green shoots, if you will, and then the PGM space with platinum and palladium, which have been beat up pretty good, starting to rise. So I think the macro environment continues to be bullish for the precious metals complex, and lots of catalysts coming up on the company level as well, in terms of earnings and traditional conference M&A season, which is always good to see in the space. So I think we have some good things coming in the space as well.
Well, it seems like the most encouraging thing is the movement in these stocks. As much as we talked last year about how it was more of a stock picker's market, look, the stocks that were outperforming are continuing to do very well, but we're also starting to see some of these precious metal stocks that have been more or less moving sideways, some even fading slightly lower last year. They're also getting a bid. So, Nick, what's this rotation of money that we're seeing into a wider range of precious metal stocks?
It's funny. I tweeted this morning that, I'm seeing some golden turkeys try to get off the ground here as they get these tailwinds from the precious metals price. It's a joke among my circle that, in a very strong bull market, especially a mining equity bull market, all the turkeys fly. And turkeys, of course, are the lower tier, let's call it the lower quartile of the mining complex, including some of those lifestyle companies that we all know too well. So you're right, Corey. I saw them starting to move this morning as well, and in recent days. And I think it's attributable to something I mentioned with you two gentlemen before, and that's a cooling off of the tech space. Corey, specifically, you asked me last time we spoke in the middle of January, what's it going to take for these mining shares to catch a bid, given that gold was wherever it was at the time, 26, 2,700 bucks. And I gave you two answers. I told you that it was going to be earnings season, which we're coming up on here soon, and you're going to see hopefully growing cash flows and at least steady costs from these big gold miners, the Agnicos, the Newmonts of the world. So goes those companies, so goes the rest of the sector. And then, sadly, but perhaps more importantly, was a rolling over of the tech space. That was the second reason I told you would put more eyeballs on the mining shares. And we've definitely seen that over the past couple of weeks, certainly the second half of January and then the kickoff of February here. I know the news cycle moves really fast, but you guys will remember the 24-hour DeepSeek scare of a couple of weeks ago that really took the wind out of these AI plays, specifically in video, which was up around a $4 trillion market cap, right? You can fit, I don't even know how many of the entire mining sectors into a $4 trillion company, several of them to be sure. That company has pulled back. All eyes are on Apple. Google reported earnings this week and was down, 7 to 9% in a single session on softer cloud sales. And so rolling over of the tech space is really healthy for the mining equities and the precious metals, because that capital has to go somewhere. And the other thing that's really good to see is that these tech names are rolling over without a wider crash in the stock market, i.e., breadth is improving, not bad breath, but breadth with a D. Other sectors are starting to lead: communications, materials, even financials, which I was telling you guys about in January when we talked, are sort of the top 3 or 4 sectors of the S&P, and IT has been the worst performing recently. So all that is really good for the precious metals complex and the mining shares.
Yeah, Nick, I'm glad you got into the wider breadth that we're seeing in the marketplace, just because some of that big mega cap tech Mag 7 money has rotated out into other sectors, and maybe some of it is finding its way into the precious metal sector. Just as you say, when people are looking for security in uncertain times, they reach for the gold bar, but some of them are looking at earnings season, and not just the gold bars, but the companies that produce the gold bars. And so when we look at what happened in Q3, it was really Newmont disappointing on an earnings basis that was the bell ringing for the sector at the end of last year that caused a cascade in selling. Could Newmont and other producers be the converse of that this time, where they actually have now divested a lot of their projects? They've built up a lot of cash. They've bought back some shares. Could Newmont possibly outperform expectations as well as the rest of the gold producers?
Well, we'll find out on February 21st, and they better. I think it's going to be a little bit more malaise for the mining shares. I do think that they'll come out. So that'll be one to really watch. And yeah, I think that the profit situation has to improve given the performance of precious metals. I think lots of other market watchers and analysts see the same thing. And so I do think when Newmont reports later this month, it's going to be maybe not a kickoff, but a shot across the bow to other investors, generalist investors who, watch those earnings and chase cash flows and good financial reports. So, I'm not an individual equity analyst. I'm more of a macro and sentiment guy, but that's something I'm watching and expect to be positive for sure.
I think one thing to note too is that when we had those earnings, those Q3 earnings, Newmont stock was ripping higher. It was up 30%, almost 30% in Q3. And one thing to consider is it's 20% below that peak right now. So look, a bit of a different valuation going into these earnings, which should be positive. But hey, again, we'll see what Newmont's earnings will be. You mentioned the kicking off or all these conferences coming up in M&A season. We've already seen a lot of M&A season, but we've also had Newmont divest of a lot of their projects. All of their projects they wanted to get rid of. Anything on the M&A front in terms of takeover candidates, or is it possible that we even see more M&A this year after last year, which was a pretty huge year for M&A?
I mean, that's a tough question. I don't invest on, M&A as a specific catalyst, so I don't have, buyout targets that I watch. But you have to think that some of these mid-tier producers, the Dundees of the world, West Dome is actually one to throw out there. I guess I do know a little bit about this stuff when I start thinking about it. They appointed an executive recently who is known for M&A transactions. So, West Dome might be one to put on your radar. Alamos continues to impress me. Those are 3 names I watch as individual equities in sort of the mid-tier space. At the same time, what you say is true. Newmont's been divesting. I saw, what is it? Discovery Silver pick up an asset recently and is going to start working on that. You've got companies that are developing, these assets. Pan American has shed in recent years, for example, and I look at some of those names. But I do think you'll see more M&A activity announced, especially as we get into the post-PDAC and into the BMO conference, which is more traditionally known for M&A acquisitions, sort of like the Denver Gold Forum in the fall. And so that's a catalyst I'm looking for specifically. And, what I'll say is I try to buy the highest quality names in the sector that are trying to build real mines. And so they eventually become buyout candidates as long as they check all their boxes and hit all their milestones and do things the right way, and can maybe discuss one or two of those if you'd like.
Well, Nick, maybe just one more follow-up on the M&A, just in a broad sense, before we dive into individual companies. The other thing that it does is it frees up capital that's been trapped in a stock to rotate into new stocks, but it also causes people to revalue ounces in the ground. So when we saw some big transactions last year where there was a takeover of a development project by a major or a mid-tier, you look at, okay, well, what was the deal for? How did those ounces in the ground get valued? And obviously, everything's at different stages of, if it's an open pit or if it's an underground and the
Sure.
economics. But people look at, for just as an example, when Goldfields took over Osisko Mining, people thought, well, that's a good transaction, 55% premium. Look at their ounces in the ground. Then they look in their own portfolios and say, wow, look at these projects that I have in mind that have these ounces in the ground. Do you think that that side of M&A could get the animal spirits going a little bit more?
I think it depends on jurisdiction. So I know you said we can wait to talk about individual companies, but I own a couple of companies that have been valued very cheaply on a cost per ounce basis. I'm thinking of names like Revival Gold or Banyan Gold, both of which trading below $10 an ounce in the ground, and both of which have multiple million ounces of gold. I've seen those names start to tick up in recent weeks, and in the case of Revival, just in the past couple of days. Now, to be clear and to be fair, these are gold equities that have not had a really good run of it. If you look at a chart of both of those companies that I just mentioned, it's down and to the right for the past couple of years. Sort of stuck in this purgatory is a good word, where the market knows about them. They're aware that they're quality assets with quality management teams and good jurisdictions, but they're in that place where they don't have a really strategic backer or an individual strategic investor that's a champion that can help raise the money. And the market knows that in order to turn those ounces in the ground into doré bars or final concentrate products, that a lot of capital is going to have to be invested, as well as a lot of time, right? I'm thinking of the typical Lassonde curve chart that you see tossed around from time to time. And so I'm not sure, to answer your question directly, Shad, I'm not sure if M&A announcements in and of themselves create an environment where you can see a higher per ounce valuation metric. But what I will say is that, because I get close to some of these smaller companies, one avenue they're looking at to unlock that value, to do as you say, to get an increased per ounce metric, is bring in a strategic or a cornerstone investor. So that's a little bit different than M&A. But if, some of these gold developers, a little bit higher than explorers, people that have already done PEAs, have a project, for example, can bring in a 9.9% or a 19% shareholder in the form of a recognizable mid-tier or major mining company, then I think that goes a long way into giving a blessing to whatever project that might be, to say, oh, a major is willing to put their capital into this, even if it isn't an outright merger or acquisition.
Yeah, that always helps those companies. And that also just ties into still how difficult it is for some companies to raise money, and cost of capital still remaining fairly high for a lot of these exploration stocks. One thing I said at the very beginning here is that, look, we've had sector leaders clearly over the last year that have completely outperformed the market, been at all-time highs or hitting 52-week highs and continuing to go. But then there's also been these laggards. You just mentioned a couple there. Is it now the time to go down the food chain, Nick, to those stocks that haven't moved, or is there still room in your eyes for these sector leaders to continue to outperform?
Oh, that's a question I haven't thought about too much. I had my positions in both those companies. I was doing a fair amount of picking over during the tax loss period in the sort of October to December window. So, to pound my own chest, I guess, or to take the traditional newsletter writer approach, you should have listened to me 3 months ago, right? When we were doing that during tax loss season. But no, there's still quality. There's still quality names out there. Two of those I mentioned, I still have buy ratings on, depending on the price in my newsletter. And so, yes, to answer your question directly, it's fine to go down the value chain at this point in time. There's still names that are significantly debased relative to the precious metals price. And I would just note the things that I typically note is they still have to be even if they are underperforming or have lagged the market, they still have to have in my mind all the things that I look for, right? Still, good share structures, quality management teams, and catalysts ahead, right? I mean, you can't just go buying, willy-nilly moose pasture companies that aren't able to raise money. You still have to look for the attributes of a successful company. And if there's external or exogenous catalysts that could materialize, then that's all the better. I'm thinking of some specific situations in South America where we have elections coming up or recent elections that have changed sort of the dynamics of an individual country, right? And using that as a lens through which to focus on the names that you're talking about, right? Whether that's Mexico, not being as bad or as dangerous as everyone thought it could have been, or I don't know, Ecuador has an election coming up. I've been reading it should be favorable to mining companies or stocks that have been beat up as well. I was taking some notes before we started talking, and I'm not a shareholder of First Quantum, but I see Trump talking a lot about the Panama Canal. That stock has been beaten down for reasons that a lot of people know, quasi-nationalized or forced to shut down in the past couple of years, and likely a path to reopen that. So a bit of a different way to think about the question, but the answer is yes. It's time to start moving down the value chain as long as the companies still check the boxes of what a quality company could be.
Well, and Nick, as you check those boxes, one of the ones you brought up is access to capital. And this makes me think about the point you were making about strategic partnerships and seeing some of the larger companies partner with a quality project, even if it's not a direct takeover, to help them bring in the capital needs. Because if you're drilling out a copper porphyry or even a deep gold system, it takes a lot of money and it's hard to raise it in the capital markets in the environment we've been in. So bringing in strategic partnerships has been one way companies have done that, but they are giving up dilution at the project level, or if it's just that they're coming in as a stakeholder. Do you have any preference there as far as seeing a company come in as a JV where the bigger company has a vested interest or maybe different gate payments to get to in a partnership, or do you like to see the bigger company just coming in at the equity level?
I like the equity level. I mean, you explained it perfectly. I would have maybe bagged on prospect generators a little bit, and I understand that model, and I understand the champions of that model. I even know some of the people who pioneered that model back in the day. But what you say is true, Shed, especially in the market we've had over the past sort of 10 years, is you're giving up a large portion of your project, and therefore you're giving up a large portion of the potential upside of that project if there is success in the joint venture. And so there's a time and a place for that, to be sure. But the companies that I'm looking at now and that I own and that I talk to, and for better or worse, give my opinion to, I'm talking about just coming in and taking an equity portion, allowing the smaller company to operate and do their thing and maintain the ownership of the underlying asset or project so we can participate in the upside. And then, maybe it comes with a right of first refusal or, a right to keep your equity position by virtue of making that initial 9 or 19% investment. But yes, I'm looking at equity investments for sure.
Let's talk silver stocks because, as you noted, look, silver is also doing better. It's over $33 an ounce. That's a strong price. Silver stocks, a lot of them have lagged. There, again, are some outperformers, but even some of the smaller production silver companies, those have just seemingly not reacted to these higher silver prices. Today, they're having a little bit of a move, but we see a 5% move, and that's a penny or two for their share price. What's your thought on silver stocks? Is it now their time to take in?
Yeah, we're getting real close, man. So I'll give you the spiel I always give. I started with the silver miners. SLVP is an ETF we've owned for a couple of months. It's looking really strong. And like you were just saying, Corey, about, going down the value chain, I think it's time for silver as well. It's a much smaller complex, to be sure. Not as many names to choose from. But when I look at some of the leaders, the Mag Silvers, for example, those stocks are starting to do well and are worthy of consideration. I'll tell you about one that we financed. I've mentioned to you guys a couple of times, and I've even heard some of your other interviewees start to talk about now is Kingsman Resources, right? A company that has cash, has the past producing asset in Chihuahua, where there's been some M&A activity recently, right? core going in there, for example, and so checks that box. We're talking about M&A activity, has cash because we raised it $1 million in October at the 25 cent level to go and drill, and they're about to drill here. So those shares you mentioned, silver names starting to catch a bid. Those shares have been at 78, 79 cents as recently as the past couple of weeks, and that's an uplift from the 25 cent level at which we financed it. So I'm not one of these silver guys. In fact, for a couple of years there, I was given presentations that were sort of anti-Wall Street bets, anti-Wall Street silver, saying that silver wasn't going to the moon, and these guys were nuts. And you know what? I was right. There's been no moon in sight. In fact, the silver by and large has stayed flat or gone down from that euphoria we saw when those groups were formed back in 2020, 2021. But I'm able to change my tune, and that's for me one of the things that makes a successful investor is being able to change your mind, and more or less a successful human as well, being able to change your mind and opinion when facts change, right? And things are changing for silver. It's breaking out, as you say, above $32. It has a lot of catching up to do for gold. I'm not the biggest gold silver ratio guy, but even I can see when I pull up a comparative chart between gold and silver since, pick your time frame, 1971 is a good one. Silver's got a lot of catching up to do. And so I'm not calling for mooning, but I am calling for increased allocation to silver stocks as a positive influence on your portfolio for the next, let's just stick with 2025, I guess.
Well, Nick, as someone that is a silver bug, I'm encouraged to hear you say that because, I've asked you a number of times about silver. And I think one of the best ones that made me chuckle off mic was when you say, look, I don't hate it, but I just don't think it's going to be as crazy as people think. And this was a couple of years back. And you were spot on. Silver was kind of stuck in the muck and it hasn't moved. So the fact that you have changed your tune is music to my ears and probably a lot of people's listening ears. But when you look at silver stocks, it's really hard to find companies that are just silver stocks. They're usually base metal stocks, lead, zinc, copper with some silver, or they're a gold company that has silver in the mix, or a silver company with gold. And so there's not a lot of just pure silver plays. You mentioned Kingsman, and we'll definitely be getting Scott on the show. I've talked with him off mic, and he's going to be coming on to talk about the drill program at one point. But just from a broader sense, as someone that's not a huge silver bug, do you like to get exposure through ETFs? That's usually your prodding attack. Or do you like to pick companies that have a polymetallic with a silver kicker? Or do you try to isolate silver-only companies? How do you approach investing in silver stocks?
I mean, yes, I'm an ETF guy. I already mentioned SLVP, which is the iShares Global Silver and Metal Miners ETFs. I pulled it up here just to give your listeners some fertile hunting ground. But in this instance, I own the ETF, but it owns things. I'll just go through its top 5 holdings: Pan American, Hecla, Industrias Peñoles, Newmont, and Agnico. So obviously what you say is true. Newmont and Agnico there in the top couple of holdings are not pure play companies, nor is Fortuna, but Mag Silver is right there. That's one to look at, actually. That's one I've traded a lot over the years in Foundational Profits as my sort of go-to silver name, right? And I think that's what it is for the market and for generalists, sort of like myself, as it is. So Mag Silver is one to look at. And then I already told you about Kingsman, which, there's a little bit of gold, but that's a silver district and a past-producing silver mine. So on the smaller end of the spectrum, I guess that's the answer to your question, right? On the larger, more liquid end of the spectrum, and that's typically the answer I give you, I go with the ETFs. And on the smaller end of the spectrum, where I can do more diligence, specifically with management, potentially get my boots on the ground and really just converse with the management team. I look for I want pure exposure, right? I'm not a polymetallic guy. I obviously own a couple of stocks that are those deposits, but I don't invest in them for their silver exposure, which is what you're asking about. If I want to invest in silver on the small end of the spectrum, I want as pure of a play as I can get. And you're right. There's not a lot of names out there. Impact comes to mind, for example, as one that I've been seeing around lately. But on the smaller end of the spectrum, individual names for sure. And Kingsman is my largest holding there as it relates to silver.
Since we're talking silver, and a lot of the pure play silver names, or at least a number of them, are down in Mexico. A lot of news on the permitting front down in Mexico. Are you excited? Are you encouraged? What are your thoughts on what's developing in Mexico for a lot of these silver names potentially being able to acquire permits?
Yeah, I think that Mexico's going to acquiesce, right? Let's start at the top and go all the way down. I know we're all tired of tariff talk, but when I was looking at the country ETFs the other day, I do a lot of looking and prodding through ETFs, right? When I'm looking for macro takes, and I'm talking about the entire country now, like the iShares Mexico ETF and the iShares Canada ETF. When those tariffs were announced over the past weekend, 25% on Mexico and Canada before they were pulled back, and everybody was freaking out on Monday morning. The Canadian ETF was down sharply, 4, 5, 6% at one point, and the Mexico ETF was up. I think the market, and I had sent out a note to my subscribers on Monday morning saying, look, I think that this is going to blow over. I think that there's going to be a deal. You just have to understand who Trump is, right? He rattles a saber and then he settles it back down with some other announcement where he can look like he is the victor or he actually did something, even though the volatility was created by himself anyway. So anyway, I'm getting off in the weeds, but the market looked at Mexico and said, "Look, I think Mexico's gonna acquiesce to what Trump wants." And sure enough, what did we get? Oh, we're having calls with Trudeau. Oh, we're having calls with Claudia, and they're going to do things that we want, whatever that is, right? Troops to the borders, the fentanyl stuff, all the stuff you guys have read about, I'm sure. And I think it's the same with the mining sector. I think it has been bad. I mean, I was involved in a company called Almaden that essentially got their assets stolen from them by Sesmarnet, which is the mining regulatory body in Mexico, and is now suing to get compensation for that asset that they essentially stole. And that's been 2 or 3 years now. I effectively think that was likely the bottom for the Mexico mining sentiment, and I see it on the upswing from here, especially in the underground stuff. I think Trump is very serious about cracking down on the cartels. And I think that Mexico is going to be looking similar to Argentina and other countries at viable businesses that can give their country growth in GDP and give their citizens access to good paying jobs. And mining provides that in a very real way. And if they can get some carve outs for tariffs, going back to them, sadly, to discuss again, I think we'll see more tariff pressure on China and metals coming from other places. And I think you'll see carve outs for Canada and Mexico, and that'll be beneficial for resource companies that have assets in those jurisdictions. So Mexico was scary. I think it's much less scary now, and I think that's real.
Yeah, and I think it's also evidenced, Nick, by the fact that we saw 3 different companies get permits in January. So it's not just lip service about Mexico improving. They've actually been doling out the permits. Now they're on underground projects or amendments to existing projects. But that's kind of the first domino falling. Hopefully we see Mexico continue to improve for the silver miners' sake, since there's so much silver in Mexico. But you brought up precious metals that we don't talk about as often on the show, platinum and palladium, kind of industrial metals with a slight precious component. They are used in bars and coins and jewelry, but they really are more industrial metals. You think catalytic converters, you think, possibly use in hydrogen batteries and hydrogen powered cars. What is your take on platinum and palladium at this point?
I think the precious metals world and in fact much of the market is mathematically connected. And what's good for the golden goose is good for the gander. And the gander in this case is the PGM complex, right? Both platinum and palladium have been beat up in recent memory and are now starting to catch a bid. Just following along what silver is doing now, starting to catch up to gold. And perhaps more importantly, I see a little bit of life in the equities, just like Mag Silver, I pointed to as a sort of a bellwether or a barometer for individual silver stocks. You can just look at, I call it South by Southwest because the ticker is SBSW, but it's Sibanye, right? You can just look at Sibanye and see that the market is willing to put capital into the PGM space, and then on down the line, right, to smaller companies that aren't quite producing, but that have pretty good PGM assets, whether that's Chalice Mining. I own one called Bravo Mining that has a really good PGM copper nickel asset down in Brazil. That stock was, down to 160, 150 a share to close out 2024 and has rallied to over $2 here in the first month or so of 2025. And so just seeing a little bit of interest there, a little bit of capital flowing into the space. And for all the reasons that we went through at the top of the interview with gold, I won't recite them all, but I think they spill over into the PGM complex. And I'm positioned for that, as I said, with Bravo. And I mentioned tax law season recently. We were picking up some assets, started to buy Generation Mining, right, which has essentially a fully permitted PGM project in Canada. So those are things I'm thinking about, and a couple of names that I own and have been buying recently to capitalize on that.
Overall, Nick, look, I think we just need to understand that this is a bull market for precious metals, especially. The stocks are joining in. So this is the time to, I guess, be selective, but make sure you're invested, right?
No
Don't miss
doubt.
out on some of these moves because the wind is at the market's back.
No, 100%. We've been deploying capital in January. I hadn't written a check into a private placement since October. I did so this month, or maybe it was last month. The calendar's just flipped, but either way, the first private placement check that I've written since October. And so, yeah, you don't want to miss the move to the upside. The bulk of the gains in these rallies come early on in the said rallies. And so, yeah, get out there and get allocated. And if you don't listen to me, listen to you or Shad or some of the other quality folks who are out there putting out high quality research on the mining and junior mining space.
Well, I think we'll wrap it up there for today with get out there and get allocated. That's a good message and hasn't been one we've been able to share in a while on the show. So, very nice to have you on the show as always, Nick, to share your thoughts on the macro, but also how you're approaching the precious metals complex from a company level and just even a strategic investing level. So, we'll keep following along with the space. Nice to see some green shoots in the PGMs. Nice to see silver making some headway and nice to see gold at all-time highs. And if people want to get more information from Nick and his partner Gerardo, definitely click on the link below this interview. It takes you over to Digest Publishing, and you can see all the different subscription services they offer their members. Nick, as always, looking forward to our next conversation.
I appreciate it. Thank you.